close, cause I'm about to let you know. Stick to your budget, you know your pace. Invested in the market, you know what you can make. Keep your dough safe, that's only if you serious about these money issues. Do you wanna know how to make your money grow? Do you wanna know? New age money makers, you know it's in you. Make this paper, you know who to speak to. Make your money grow. It's for the future, it's that simple.
And thank you so much for joining me. Over the past few lessons, we've been looking at a business plan and the reasons why it is important to draw up one before you start your own business. But a business plan is only the start of your career as an entrepreneur. But today we're going to be looking at how you can use your business plan as a working tool for your business.
Hey Mampo, but I thought that we had finished our business plans.
Oh no, your business plan remains useful right through the life of your business. We can use it to monitor how well your business is doing. What do you think the main function of your business is?
Well, that's easy, to make lots and lots and lots of money.
Of course, all businesses are about profit. Do you remember what profit is?
Of course I do. Profit is the amount of money left over at the end of every month once you've paid off all your expenses.
Exactly. Now we spoke about how you will need startup capital for your business, which, like the name says, is just the money you need to start your business. Remember that you may be able to convince the bank to lend you some of your startup capital, but most banks will not lend you money unless you are also investing some of your own money in the business.
Of course, it's like if you invest in your own business, then it shows that you trust your business idea, and also you're probably going to work harder to make sure you don't lose any money.
That's right. Now let's take a look at what you would do with your own capital. Remember that this money will be invested in order to set up and run the business.
Okay, so that's like saving up money for years, right?
Most probably. If you weren't starting a business, then this money would probably be invested in a bank or other investment. Remember we spoke about the need to make your money grow?
Absolutely. I want my money to grow and grow and grow. That's why I keep it in a savings account and not under my mattress.
That's absolutely right. You could have invested your money in a savings account or a fixed deposit account or even in a unit trust investment. The important thing is that you make a good financial decision.
Well, hello. That's why I'm on this show, Mampo, to learn how to make good financial decisions.
Great. Let's take an example. Let's say you have 100,000 Rand that you choose to invest at the bank in a fixed deposit account for 12 months on which you will earn 8% interest. What will it be worth after that 12-month period?
Okay, so we're talking about simple interest, right? That would just be 100,000 times 8% plus the original amount. So that total after 1 year, so that would be 108,000 Rand.
That's exactly right. But let's say that I'd rather choose to invest this money in a business and made a profit of 5,000 Rand at the end of year one. How much interest would I have made?
Okay, that's a bit of a brain teaser, right? I suppose I'd have to do the calculation in reverse, which would be 5,000 divided by 100,000, which would equal a profit of 5%. Am I right?
Exactly right, Joe. Well done. So which is a better investment? Investing your 100,000 in the bank account at 8% interest or investing it in a business at 5% profit?
I don't really know, because it looks like investing in a bank is a better idea. But then if you invest in your business, then at the end of the year you have a 5% profit plus your business.
Correct. It's a tricky question to answer. Obviously, if we look at the figures alone, it is obvious that the bank is a better investment option in terms of percentages. Also, bear in mind that investing with a bank is a lot less risky than investing in a business.
Because if your business might fail, then you lose all your money, right?
And also, if you invest in a bank, you don't need to do any work. You can just sit back and watch your money grow. But that is only one half of the story.
So what's the other half of the story?
There are many other factors that we need to take into account. For instance, if this is a new business, then we can't expect it to make a lot of profit for the first few years. In fact, to make any profit at all in your first year is a good sign.
So maybe it's a better investment option.
All I'm saying is that for a business to show any kind of profit in the first year is actually quite rare. Many businesses don't make any profit for years and years.
Sure, so then you're saying that making 5% profit in the first year is actually quite good then?
That's right. You might well be very happy with a profit of 5% if you predict that your profit will increase substantially over the next few years.
Okay, then I'm sold. It's better to invest in your business than in the bank.
Well, as I keep on saying, it all depends. However, as a general rule, there is no point in running a business unless the profit you are making is more than what you could earn in a bank or other investment.
Okay, so you're saying that if you can earn 8% interest from the bank, then you should aim to achieve more than 8% profit from your business.
That's exactly what I'm saying.
Okay, then so from our business plan, we could see how much we should be earning from our profits, and then when we've worked out our profits, then we can compare how much we'll earn from interest at the bank.
I couldn't have put it better myself. That's why it's so important to monitor your business while it's running. And if at any time the profit you are making from a business is less than the interest that you would be earning if you invested your money in the bank, then you need to do a serious rethink.
Sure, what are the other things then, Mampo?
Remember that when we started with this financial literacy program, we spoke about how important it was to manage your finances carefully. We spoke about a number of different aspects to financial management. Do you remember what these were?
Of course, I watched every show. It's all about keeping a budget, right?
Exactly, well remembered. Firstly, you make a list of all the things you need and want, and the amount you spend on each of them. That's your expenditure column. Do you remember what the next column was?
Okay, the first column was for expenses, then, oh yes, income. That's the money that's coming in, right?
Absolutely. The first column is for all the money that goes out, and the second column is for all the money that comes in. So what do we do once we filled in our two columns?
Easy. Then we just add up all of our figures, and then we check if we have enough income to pay for all of our expenditures.
That's right. If you do have enough money coming in to pay for all your expenditures, then give yourself a big pat on the back. Well done.
But then, what if there isn't enough money coming in to pay for all of your expenses?
Then, Joe, we have a problem. But don't worry, this lesson is all about solving problems. All we do is we go back to our budget and do some careful thinking. Even if we did have enough money to cover our expenses, we can still improve our budget.
So how do we solve the problem then, mums?
There are 3 ways of going about it, Joe. Step 1 is to see if there are any expenses we can delete. Let's say we were going to the movies twice a month. We could just stop going. Step 2 is to see if we can reduce expenses. For example, we could use the telephone less. Step 3 is to think about whether we could increase our income.
Okay, but I just have one question. This budgeting thing, what does it have to do with running our business?
Very good question. Well, businesses also need to draw up budgets.
Okay, now is there any difference between a budget for a business than that of a personal budget, like the one we've just discussed?
Basically, there is no difference at all. A business budget does exactly the same thing as a personal budget. It looks at the money that we expect to come in and the money that we expect to go out. Remember, budgeting is all about the future.
Okay, so it's like predicting the weather, except you're predicting the weather for your business. Like, is it going to be cloudy with small profits, or the sunshine with big, juicy profits?
That's right. Now let's take a closer look at a business budget. Where do you think the money coming into a business or the inflow will come from?
That could be from sales of goods or services provided, or maybe even interest that you earn on the business's money, that kind of stuff.
Exactly. And what kind of things would your expenditure or outflow of money be spent on?
Well, that's even easier. We discussed that in the business plan. That's things like paying for your running expenses, like paying for the goods you sell, paying wages to the people that work for you, and paying rent and electricity, that kind of thing.
Absolutely. You might also be paying back interest on the loans you took out to start your business. And when you started your business, you might have bought equipment or furniture on credit, so you might still be making repayments on these things.
Okay, so this budget thing is actually quite a good idea, because then it makes sure you can see that you've got enough income to pay for your expenses. Your inflow needs to be more than your outflow.
Spot on. But drawing up a budget is only the first step of a long process. It is extremely important that businesses keep very good and thorough records of everything that happens in the business. The financial manager will need to keep records by using accounting tools such as journals, ledgers, trial balances, income statements, and balance sheets.
Yo, that's quite hectic, Mampo. Surely we can use computers these days for that type of thing?
You're right. More and more businesses are moving away from the old manual ways of doing things towards a computer-driven approach. However, accountancy skills are still extremely important to any business.
Okay, well, I do accounting at school, you know.
That's great, Joe. Accountancy is a very exciting field and it is so important for all the people in our country. However, in this section of the lesson, we will only have time to look at a few aspects of accountancy.
That's okay, as long as we're looking at the exciting aspects.
That's exactly what we'll be doing. So once you've drawn up all the records, the final step of the process has to be done. This is the control aspect.
Control aspect, what's that all about?
Remember what we said about the budget? Remember we said it was all about the future.
It's like a weather report, it predicts the future.
Well, the control aspect of financial management is all about making sure those predictions were correct. In this stage, we take out all the figures from our record keeping and compare them to the figures in our budget to determine how successful we've been.
Okay, so I see it's like a reality check to make sure that our brilliant planning works out, right?
That's right. This control aspect is probably the most important step of the whole process. Unfortunately, many businesses do not complete this last step often enough.
How often is often, Mampo? Can you do a control once a year?
Once a year is not really regularly enough. Control should be done at least every month, if not every week.
Sure, so then it is quite a lot of work. So if you want to do a control once a week, then it means you need to do a weekly budget, right? To compare your real life figures?
Yeah, you're ahead of the game, hey? That's exactly right. To do a weekly control, you will need a weekly budget. This is a very good idea for any business because it will mean that you know exactly how your business is doing financially at all times.
Cool, so what do you do next?
I think we've learned enough today, don't you? In future lessons, we're going to be looking at how to do this kind of financial control we've been talking about. Hi, Papatu.